Everyone wants to catch the Bitcoin and crypto bottom. Picking up the rock bottom prices on these assets can be life-changing in a couple of short years when another parabolic bull run returns. But 99% of people won't catch the exact bottom. They wait, they get scared, and they don't pull the trigger when they should have. So how do you catch the bottom? We'll find out in about 10 minutes because it's time for Chico Crypto. So there is a lot of fuss over if we are near the Bitcoin bottom. Why? Well, Bitcoin is basically at last cycle's all-time high of around 20K. In previous cycles, the Bitcoin bottom has never fallen lower than the top of the cycle before it. 2011, the Bitcoin top was basically $30. The Bitcoin bottom during the following bear market was about 76 bucks. End of 2013, the Bitcoin top was near $1,000, and the following bear market low was around 200 bucks. Then the end of 2017, the Bitcoin top was near 20K, and the following bear market low was just near 3K. So where the price has fallen to 20K, the 2017 previous cycle high, is unprecedented territory. Many argue that this will hodl as it's never happened before. Well, in my opinion, it's not the Bitcoin bottom. I have a feeling we are going to go lower. So does that mean as an investor, you should hold off on purchasing Bitcoin? Should you wait and try to time the exact bottom? Well, my opinion says no. Purchasing here won't matter in the long run as you are getting close to the bottom still. Dollar cost averaging during a bear cycle is the smartest move. What do I mean? Well, let's just look at previous cycles for an example. 2017 and the following bear market, the Bitcoin price held around 6K from June of 2018 all the way until November of the same year, before the capitulation dump down to the lows of 3K. So if someone was to buy at around 6K during that time, how long did it take for their investment to have a return? Well, pulling out the chart expanded. Around May of 2019, BTC crossed 6K again. So if you bought at 6K in November of 2018, right before the dump, it would have been only 6 months before the investment turned positive. In the long run, it didn't matter if you bought at 6K. Another example with the cycle before. 2013 and the following bear market. The price of Bitcoin held around 350 bucks from October of 2014 to the end of the year, before a capitulation dump below $200. If you were to buy around that $350 level, how long did it take until the investment turned positive? Well, expanding out the chart, we can see the price officially recrossed 350 by the beginning of November of 2015. So less than a year, your investment would turn positive if you bought before the capitulation dump back in December of 2014. So buying right now isn't stupid. Of course, you might not hit the exact bottom, but based on history of previous cycles, it would only take 6 months to a year for your investment price to look as if you were a genius. My recommendation, DCA, dollar cost average, putting in a set amount every week, 2 weeks to a month over the next 6 months. And it's possible to grab crypto prices which will never be seen again. Work toward that full Bitcoin. Strive to obtain 32 ETH. Because next bull run, it will be unobtainable for most folks. But speaking of ETH, it's time to shine a light on a major opportunity I see in this bear market. Everyone knows Ethereum is moving to proof of stake. Evan Van Ness, staunch Ethereum supporter who understands the merge and timeline for it better than most in the space, tweeted, "The merge, scheduled for mid to late September. Important caveat. Scheduling is done via block number, and thus it can fluctuate due to hash power changes, which he explains below. Ethereum didn't schedule a Gregorian calendar date for the merge. We did something more important. We scheduled the difficulty bomb, and we delayed by a specific number of blocks, 700,000 of them. which puts the estimate of the merge happening sometime in September. And when this happens, the miners for Ethereum go away. They will no longer be securing the chain, confirming blocks, and earning the rewards. And the big one, earning the fees, the gas fees users pay to transact on the Ethereum blockchain. Now, when the markets return bullish and Ethereum gets highly used once again, these fees can be astronomical. For example, back in November of 2021, we can see the one-day fees paid out by users to the miners was over $80 million, and the 7-day average was over $73 million. Now, there are just over 402,000 active validators for ETH2, and if the fees were split equally between them, it means during a bull run, validators will be getting basically an extra $200 from fees per day, which is an extra $6,200 per month. This is besides block rewards, which as of right now is just above 4% APR, or 0.13 of an ETH per month. In a bear market, no one sees this opportunity of becoming an Ethereum validator and staker, as getting the 32 ETH required to stake means you have the mining machine for Ethereum, which never needs upgraded. It doesn't need maintenance and doesn't suck electricity and thus money out of your pocket. Ethereum is becoming the settlement layer for all chains. Solana is bridged to Ethereum, Bitcoin is bridged to Ethereum, Binance Chain, Avalanche, Polkadot, and even Cardano is bridging back to ETH. So in my opinion, when the rumbling of the bulls come back, the amount of fees Ethereum will be generating will outdo the November 2021 numbers by a long shot. Now, many of you will say, but Tyler, to stake and get the full block rewards and fees, I need to have 32 Ethereum to solo stake. That's over $32,000. Well, all I have to say is, yeah, it's a chunk of change, but if Ethereum drops to 800, it's only 25K. And if Ethereum drops to 500, it's just 16K. But there may be a way to get that amount even cheaper during this bear market. Now, everyone should know about STETH from Lido Finance. It's a tokenized form of staked Ethereum. When staking with Lido, you mint staked tokens, which are supposed to be pegged 1-to-1 to your initial Ethereum stake. Thus, your staked tokens can be used across the DeFi ecosystem, unlocking them to be used. While solo staking locks the Ethereum until after the merge. Although the ETH behind STETH is still locked too, this just creates a synthetic version. Now, there has been a liquidity crisis going on with STETH due to market conditions, Celsius, and 3AC, and the 1-to-1 peg has been collapsing, meaning you can pick up STETH for cheaper than regular Ethereum. And traders are seeing this as an arbitrage opportunity, a chance to get Ethereum on the cheap for rock bottom prices, which will be much cheaper than after the merge when the beacon chain unlocks Ethereum for withdrawal. But there are other forms of STETH. The decentralized RETH from Rocket Pool, but that is holding its peg. Although there is another form, VETH, Voucher ETH, who even has a lower peg than Lido's STETH. Looking at the price of Ethereum last week when I shot this video, it was $1,076. Looking at VETH, we can see it was sitting at about $868. Voucher ETH, just like STETH, entitles you to 1 ETH when the unlock happens after the merge. So if you think Ethereum isn't going to drop below $868 by the time of the unlock, this would be a solid way to pick up ETH on the cheap. Although remember, I think we are going to go lower, and Ethereum could hit between $500 to $800. That would mean if this disparity held, Voucher ETH would hit between $650 to $400. If $400 is hit, that would mean 32 ETH to become a solo validator would only cost about $12,800. But I'm not buying VETH yet. I'm keeping my eye on it. It looks like a great way to increase your Ethereum stack. You just have to time it right. But of course, beware of the risks. Things don't always work out the way I think or you think. Cheers, viewers. I'll see you next time.